This John Lothian news video is sponsored by Hong Kong Exchanges and Clearing is all about connecting. CEO Charles Li says his exchange is the linchpin that connects mainland China's markets to the rest of the world. Li spoke with John Lothian News at the FIA Boca conference about its linkage with China's markets and the explosive growth it sees now with the London Metal Exchange firmly integrated into its business.
So 2014, great milestone. Everything that we need to do on LME to make sure it's becoming a real viable commercial entity essentially done. I think 2015 for LME is really delivering. I think revenue is likely going to increase exponentially, both because we add LME Clear and also commercialization. Hopefully, businesses also continue to grow, with our access to China. That's London. And for 2014 for Hong Kong is really building a connection, with China. Is the Shanghai-Hong Kong Stock Connect linkage that we announced mid-year and launched sometime in October. And it's a fantastic success, and we're now building onto it. For the China, Hong Kong, and Asia business of Hong Kong as a group, we're really going to build on the Connect program. I think that everybody think the Connect is a simple linkage of two exchanges trading, but it's actually, it goes a lot beyond that now, because we're not really talking about simple linkage. We're talking about creating a potential model of connecting the last pool of capital in the world that has yet to be globally deployed, finally connect that with the rest of the world. So it is not about the simple linkage, it's about how we link them together that make the biggest difference. Probably over a longer period of time, but massively more transformative, is the domestic liquidity need to find a home, need to find a place to invest. If MSCI Emerging Market Index ultimately include China, we are talking about a few $100 billion that need to go into China. But that, in the context of domestic liquidity, I think, the domestic side is even more significant because the banks have about $22 trillion US sitting in there. The capital market is only about $5 trillion US. That's a full 5-to-1 relationship. Whereas in the United States, it's 17, 18 trillion, both GDP, market cap, and banking assets. So it's a kind of a 1-1-1 relationship. In China, it's 5-to-1. And then you know that banking assets are not going to sit there. The reason they're sitting there, there's really very little to do. So our job is to find a way to create that connection so that domestic liquidity, which is probably the largest pool of capital that is yet globally deployed, that over the next 5 to 10 years is going to find a place. So we need to bring the world to them. It's not about them coming massively onto New York, onto London, because that's not going to happen anytime soon. China is not going to change fast enough. The Chinese aren't going to get sophisticated enough. So what we're trying to do is to use the connection program to essentially get the two exchanges to absorb 80-90% of the market differences between China and the rest of the world. So that essentially allowed the Chinese and allow us, international investors, to sit in our homes, in our own time zone, relying on your broker system, relying on your own exchange, relying on your own regulation, relying on your own settlement and clearing system, but trade the other side's product. So if that model ultimately works, it works wonders, because that we can then bring so many more products into that liquidity pool for the Chinese to invest in. And for the Chinese to feel comfortable, then many of the product they trade actively, that international investors want to trade that with their liquidity together, mixing them with the chemical impact, that's going to be a tremendously transformative. Equity derivatives you could do either of two forms. One is to replicate a Shanghai-Hong Kong Stock Connect, Cash Connect. Essentially, our liquidity go and invest in their product. Their liquidity come and invest in our product. But that is going to take a while for that model to be built, because that's a derivative risk management tool that we need to synchronize. Much more tougher than cash. So initially, we may potentially start by just cross-listing, cash-settled contracts. We can just take the settlement price and then launch a new derivative in Hong Kong. Essentially, is the tail contracts of the dog, which is traded by the Chinese, and we trade it as a tail. And conversely, our Hang Seng Index could be listed up there. And then if this works, then we can take all the time to build the connect. And if this thing works, we can do commodity, we can do base metal, we can do thermal coal, we can do any other thing that might make sense. We're watching it on the sidelines and thinking whether we need to join the arms race. And fortunately, that arms race, seems to be, slowing down a little bit purely for the heck of it, for the sake of getting the fastest trading engine. Seems to be no longer everybody's, aspiration the next month. And I think people are now taking a pause look at the business model. So we're glad we don't have to rush to join that, and we were never part of the race. But I think our business model, in London, is to make us be more accommodating to non-traditional players, financial players in a very much of a physical-oriented exchange in the base metals space. And for Hong Kong, is really much more about how to find a way to connect with China. In many ways, China are very much behind the rest of the world. In many other dimensions, they are way ahead of the rest of the world. When we connect ourselves with them, it's much more important for us to figure out what's the fastest way for us to connect, what's the longest, the most sustainable way for us to connect, and what's the cheapest way for us to connect. Rather than, we don't need to be the fastest machine, we don't need to be the most sophisticated, but we need to have a lot of functionalities, we need to be much more, versatile, and we really need to work with them to make sure that we work together. Our global aspiration really derives from our unique strength that we are the one who can bring the world to China, and we can bring China to the world. In the past, we are a point, or maybe we are a point on the line that connect China and the rest of the world, and if we're pretty happy with the gateway, people are going through us. Today, we're no longer content with that. We are trying to create what I call a mutual market, a common market, a market where China overlaps with the international market, with Hong Kong operating that overlapping color between the two big circles. And we're right in that middle, and we create a market there where it's a destination in and of itself, rather than we're just a gateway for people. So that market, if we have enough things in that market for people to trade, then we get investors from both China and the world to come to that market as the destination rather than just as a gateway. So that's our aspiration. Again, early stage, but we're getting there.